to episode 4. Is it episode 4?
It's episode 4. It's episode 4, man.
Episode 4 of Pipchasers. Thanks for clicking on our video once again for another installment of Trade Drip Talk. So let's start off by asking Travis, how's your week been in the markets?
It's been topsy-turvy, you know, but I've spoken to you midweek, and for the start of the week, I've been under the weather this week as well, so I think my mindset, everything was just under the weather. None of my trade executions were a bit disturbed because of my health. But end of the week hasn't been too bad, so I took a couple of days off. I was sat in my bed for 2-3 days, I'll be honest with you. And that got me heavily invested in the charts over Wednesday, Thursday, Friday, and I pulled back some pips that I lost and broke even, and actually ended the week up. Nathan, I was surprised. Like, the pound was great to me. To be fair, the pound was sick. The pound's been good to me this week, and the dollar yen been really, really good to me. Obviously, I had my long-term targets. Long-term targets have played out. So I had a good closure to the week, I should say. So what about yourself?
Well, myself, guys, I started the week really well. My account was up for about 20%. But by the end of the week, I unfortunately fell trapped to some of the beginner mistakes that we've all made in the market. Those of you that are trading, me and Travis, we're only a year into this really. And I fell prey to a bit of over trading and a bit of chasing money. So I ended up losing the profits that I initially gained. Now, obviously a lot of people will be scared about this. Oh my God, lost profits. But at the end of the day, I'm fully invested into trade. So I know that these things are going to happen because we're not professionals at the end of the day. I've been studying the charts for a year. So these are things, if I wasn't going through this, I wouldn't be improving as a trader. So something for you newbie traders to keep in mind, or those of you that are going through this, don't worry. We all go through this. If you're not going through it, then you're not trading. You're just watching on the sidelines, you know what I'm saying? One of my mentors that I really like to watch, Amanat, he says he's got a little statement saying, money made by accident is like a default with a really high interest rate. So I'm just learning that for first hand. So yeah, start of the week was good, but then I lost the profits. It's how it goes.
That's how it goes.
How it goes.
Like I say, like, you gotta keep it realistic as well. Like, this isn't a job, but you can almost say taking losses in trading is part of the job description. So let's not bullshit anyone, as we like to say. Like, taking these losses is part of it. It's the emotions that come around. If you're not ready to take a loss, you shouldn't be trading.
You can't trade.
You can't trade. Simple as that. You can't enter this market without taking L's. That could be from bad practice, could be from manipulation. It all depends on how you manage your trading patterns and your trading analysis. So that's one thing for you guys, obviously starting off, just to bear in mind. Don't be afraid to take those losses. You know what I'm saying?
Exactly, and that brings us to our topic. So today's topic for Pipchasers is Forex for Dummies.
Dummies.
You know what? You get me? Smooth it. What's the first man's name?
It's skinny.
Yeah, skinny.
Smooth it.
Know it.
So,
you guys, if you're interested in Jamaican films, or you want to watch something different, a film loads of you probably have never watched, Third World Cup. You heard it here first, yeah. I say it's one of our number one films growing up.
I'd say behind, I'm putting that probably in front of, like, see, the Fridays. We love the Fridays, but as us guys, as young black family growing up, if you ain't watched Third World Cup, go see that.
Something's wrong. If you ain't watched Third World Cup, you probably ain't eating fried dumplings growing up. Simple as that. Big film. So
so literally, Forex for Dummies. So when we say dummies, literally just the basics behind
technical analysis, basically.
Yeah, so just keeping it very, very simple. Not looking to any indicators and things that can help. Just literally from looking at a chart, what could perhaps help you guys starting out nice and simple with regards to what you need to trade.
Yeah. So one of the main things is candlesticks. Well, we're not going to go through candlesticks today. We'll probably leave that for another video. And to be fair, there's so much videos on candlesticks, but we'll say that for another day. This was going to be more for you guys that are already into the markets a little bit. You know about candlesticks, and you want to just know how you can look at a chart and begin to start making your own biases, whether price action is going to increase or decrease. So what we're going to do, we're going to get straight into it. Before that, we're going to welcome our special guest.
Yes, some may think he's a scumbag, some may think he's the special one. You know what I'm saying? But he's our special guest this afternoon.
Our special guest today, Jose Mourinho. How you doing, Jose?
Please tell the guys, why is Jose, obviously you may see the footballs in the background as well, but guys, why is Jose Mourinho our special guest? Obviously you brought him into the office today. What's the reason behind it?
Well, I brought Jose Mourinho into the office today because this week you guys may or may not have seen that he's out in the media saying that there's a manhunt out for him, and he's currently a scapegoat. So we thought, why not we use him as a scapegoat as well? And we can blame Jose Mourinho for the losses that I incurred this week. And we're going to also blame Jose Mourinho for any flaky Brexit talks that's happening, which he's already owned up for.
Literally quoted.
So we're going to bring him in the office today, and he can be with us and stand accountable for all the losses that I've incurred in the market this week. Isn't that right, Jose?
Yeah, that's right.
As you can see, I'm not good at accents. But here he is. So we introduce Jose Mourinho. Now what we're going to do is introduce you into some charts. And I want to let Travis the Maestro start off with his two pairs. And we're going to go straight into the chart. So if you have got your trading view open, get it open and see if you agree with what we're going to be saying today. What we're going to do is telling you about the week we've had. And then we may even give you some predictions for the upcoming week. Alright, so we're not just reading the charts, we're going to actually give predictions, we're going to stick our neck out of the line, and I'm sure when we're on volume 50, you're going to see that Rebirth Holdings know what we're talking about. Okay, so Travis, let's go ahead.
With pleasure. So, keeping it very simple with you guys, obviously looking at the chart, it may look a bit alien to you. Obviously guys that are obviously within the chart, you may know simple key terms and whatnot. But we're going to go over literally perhaps two topics or two elements that we feel that are essential, just knowing the basics within obviously looking at the Forex market. So currently obviously I'm situated looking at this chart here, which is the the US dollar against the Japanese yen. Weekly time frame, guys. So this is what I'm looking at, this sort of key area here is over probably a yearly period, guys. So there's probably about 52 weeks worth of candles here. So as you can perhaps see, guys, I've got a nice pink trend line going down there. As you can see, guys, so we've got a swing high, another swing high, and another swing high here. So what in hindsight, each swing high, apologies, I've got a lower swing high. So each time we swing into the upside, we're going lower in regards to its peak before it falls back down, guys. So as you can kind of see here, guys, I'll put another trend line in there. The chart is actually moving in a downwards trend. Keeping it very simple. This is on a long-term basis, this is, guys. But also I'm going to talk to you a bit more detail in regards to what's happening within the past recent weeks. But overall, you could have said that the US dollar against the Japanese yen was going in a downward trend. Okay? That's keeping it quite simple. But obviously we're looking at quite a big time frame right now. The reason why I'm concentrating on the weekly time frame is simply due to the fact of obviously my technical analysis. So as I predicted in obviously previous episodes, looking at previous history, once we got to these periods in the month with regards to this time last year, we did see price hit around the zone of 114,500. So that was for me over the past 3-4 weeks. As you can see here, guys, if I was zooming over the past 3-4 weeks in the candles, I was expecting the price to hit a certain level. Why was 114,500 a key level for myself in regards to why didn't I think it's going to be 116 or 115 or 170. Why was that in particular ideally a good target for myself to hit? Simply due to something called levels of resistance and levels of support, guys. So literally when it comes to the actual market and how the price action works, if you look across this same market talk about, it's 114,500 zone. We've had 1 touch, 2 touch, 3 touch, 4 touch, 5 touch, 6 touches. So what we've had, each time we've touched this key price for the dollar against the yen, it's decided to, in hindsight, reverse and pull back down. Gain strength again, pull back down. Gain strength again, pull back down. I know it sounds very repetitive and quite straightforward, guys, but it's as simple as that. So the price of 114,500 is acting as a key level of resistance where price, in hindsight, doesn't like to break through that key level and tends to fall back down. So literally, guys, for me having that key level of resistance there, I then know that's a key level and a key target for myself to have before making perhaps any movements to the downside or looking for any further targets to the upside. So that's what I'd have to tackle first before obviously continuing. Okay?
Just to paint another picture for you guys, exactly what Travis is saying about resistance. Say we've got this room here, and as kids, everyone had a bouncy ball. So imagine we had a bouncy ball and I threw it aggressively onto the floor. That ball would recoil off the ceiling and floor as long as it's still got the momentum. And that's exactly what price action does when it is trapped behind resistance and support. It's like a bouncing ball rebounding off the floor and ceiling until it either breaks through the ceiling or breaks through the floor. So that's just a good way to paint a picture in your head of how that works.
Fantastic, simple as that, guys. And Nathan kind of gave quite a good analogy. It's not like that. I'll be like that, you know. But use that in the course. But literally, guys, as you can see here, this is the past week. So over the past 5 days of training, obviously this is where we closed end of last Friday. And as you can see, the price spiked up actually quite perfect to the T on the weekly closure. Obviously pulled back down, but as you can see, I'm just zooming for you there, guys. We did have the green candle spike up to this zone of the 114,500 before, obviously, as you can see, the closure was all the way back down here, guys, at the end of the week on Friday. Let me just step down to
what on your weekly candle. What would you say that candle? What would you say the weekly candle closed for you on the UJ chart?
Okay, guys. So this may sound alien to you guys, or for you guys that may know, obviously candlestick formations. This is called a gravestone doji. Okay.
And what does that show you about the session in the week?
So that shows you perhaps indecisiveness in regards to what the price of the actual price of the currency pairs wants to do next. In all fairness, it hasn't got the momentum to go to the upside. Doesn't necessarily have the momentum to go to the downside. So yeah, bit of confusion in regards to where the price physically wants to go next. Okay, so that's always a clear indication to myself and to be wary on my next step.
Definitely. And it also shows that during that week, the buyers managed to push the price up. But as Travis has mentioned many times, that 114,500 resistance has been a key level of resistance. So when the buyers did push it up to Travis's resistance, sellers took over, or the buyers turned to sellers and actually pushed that price down below that key resistance line.
Fantastic, guys. So literally, just talking about key levels of support, obviously is one quite simple method of having to look at your charts and your technicals. I'm also going to talk about, obviously, as we said, we talked about uptrend, or we talked about downtrend earlier. Over the past week, as I said, we actually closed on a bullish candle. So obviously, the price did go up in regards to a trend direction. Just to show you on the chart, guys. Literally, let me just get the arrow tool out here. As you can see, over the daily analysis, we're looking at across the past 3 weeks, guys. We was in obviously a current uptrend, as you can see there, guys. Okay, so as you can see, we've got the 2 arrows indicating that we're in think quite a bullish uptrend in all fairness. But then as you can see here guys, we was bullish all the way up into this key level here, which is at 114,500. And as you can see, as soon as that hit, we pulled back down. So the price did pull back down, but obviously it still remained within that channel of the uptrend, so keeping parallel to recent price action, okay? Then you have Friday. So this is for me guys, the Friday's daily closure perhaps then starts to indicate to myself what's going to happen next. So this is where I need to be mindful, because in all fairness, if we have another bearish day, we're actually stepping out of bullish momentum in all fairness, and we could perhaps we could go down, but in all fairness, we could start moving sideways guys. So as you can see there, we could start breaking out of this channel and moving sideways into something that's called consolidation. So as I mentioned on the weekly time frame, that downtrend, we can called downtrend, an uptrend on the daily, but obviously we may be moving into a consolidation period, which is sideways movement. So I just want to break it down now guys in regards to what I'm perhaps looking forward to in regards to next week in all fairness on this pair. And from what I can see, I'm stepping down to the 4 hour time frame for you now guys, just to see what the price is doing within the day. Literally, I'm not sure if you can, have you got USD JPY open there?
Yes, I've got it open, yeah.
Stepping out, obviously, keep talking about key levels of support and resistance. I can also see a charting pattern being formed, potentially, okay? So what's this charting pattern I'm obviously looking out for, perhaps over the next couple of days, and what could that indicate to myself? So in all fairness guys, there's something called a head and shoulders formation. So in all fairness, what you may do over the long term, once you know about trading a bit more, you get used to obviously using different confluences and things like that. I may perhaps be looking at, obviously we'll see by the time I finished. By the time I finished obviously discussing what I'm looking at guys, I'll give you my overall directional bias for next week. But literally, with the help of another charting pattern, another confluence, that could kind of, what I've got in mind with regards to what I'm going to tell you guys next in regards to directional bias, this helps me a lot. It gives me more of a reason to kind of give myself the extra confidence in, yes Travis, what you're thinking is possibly or most definitely in hindsight going to happen in relation to the charts. So as I said, this head and shoulders formation, we've got a left shoulder here guys, the head, and we've got a right shoulder. It may sound alien to you, but that always more or less indicates more bearish momentum guys. So in all fairness, we've talked about key levels of support and resistance. On my chart guys, I've got this little purple level of support and resistance here guys. So literally around the 113,200 and around the 113,200, I've got this little purple bar here guys. This is where in all fairness, if price was to fall, this would be my first target zone, okay? Simply due to the fact of looking at the daily time frame, in instance, this is where I set this key level of support and resistance. This is where price tended to react and either shoot to the upside or shoot to the downside, or perhaps stabilise that and move sideways a little bit before continuing a certain momentum. So as you can see just below this level of resistance here, we're in a positive uptrend. We had a few hours or few 4 hour time frame hours of moving sideways before we kind of broke through the quite a lot of bullish momentum. We broke at this point here, we broke through with around 40 to 45 pips to the upside, which then continued our bullish momentum towards our total target of 114,500. So just to obviously show you as well why I've got that sort of key level here. Textbook guys, obviously something we do on the course, which kind of shows you how to kind of measure out our charting patterns using certain aspects of certain tools on obviously TradingView, and I would have a certain target, obviously. Perfect. So just using the copy and paste tool there, guys, I've got a target of around the 113 zone. Obviously, it's predicted in hindsight. I'm not going to go into too much depth in regards to moving averages and stuff like that. Looking at moving averages gives me confidence of perhaps moving out of an upwards trend into perhaps a sideways consolidation zone. It may not be finished in regards to creating that right shoulder. It might spike up again and retest. I've got a key level as well around the 114.05 zone, just where the left shoulder and the actual right shoulder at the minute is currently formed. It could spike up again, simply due to the fact of we may not know if we may move sideways for a bit, and stay within this zone. So as you can see, we pull back down, guys, and then we kind of, the very last candle of the session, we did pull back up. So you could say we may not be finished in this little key area here, guys. So for honest, myself on this pair, I could be looking for perhaps a retest of 114 to try and confirm another right shoulder, or perhaps if there's any fundamentals that could obviously add a bit more liquidity to the market, I could see that pullback start to continue to perhaps obviously suggest that I've got more of a bearish momentum. So literally, guys, just on USD/JPY, I'm looking at the weekly time frame where the weekly candle hit a nice key level zone of 114.500. Also had obviously a candle which was the gravestone doji, which we'll explain in further detail in another video. That also gave a confidence of downside or indecisiveness. Stepping down to the daily time frame, guys, obviously I had where we kind of went out of that upwards channel, and perhaps with the past 2 days being very bearish, and it's kind of breaking out of that upwards channel that I drew on, it could mean that we could be moving into a sideways or a downtrend of a channel. And then simply stepping down to my 4-hour time frame to see in detail what goes on within the days. I've also found another confluence, which is a charting pattern, which was a head and shoulders, which perhaps showed me once again me coming out of that upwards channel which we keep talking about, and perhaps hitting a certain resistance to the upside, creating a right shoulder, or hitting another resistance to the downside, continuing my bearish predicted expectation, guys. Nathan, I know you briefly looked at USD/JPY. Have you perhaps, would you, just keep it real, would you agree with myself? Could you see any extra things that may pop up before perhaps what I feel may happen? Penny for your thoughts.
Well, if I was trading UJ, I'm in the same position of you. I'm going to expecting a continuation to the upside, because I'm on the 4-hour chart and I can see that we've still made a higher low here at 113.56. So, and also if it does touch my upward trend line, then that could lead to another new higher high. But as Travis did say, we have got a head and shoulders slightly forming, and if I get the fib tool out, and due to the downside, we can see that we've got a 50% retracement. Price has tried to break point B, but it did rise up and go back into the fib retracement zone. But for a T profit, a target, the 50% extension does line up perfectly with a support that I've got at 113.17, which is 3 pips away from Travis's 113.20. So I'll be looking for those two outlooks. Either downside momentum going down to 113.18, following a 50% retracement, or a touch on the upward trend line to make a new high.
Fantastic. So yeah, once again, like, you're using certain things like Fibonacci tools. Obviously, when you're much more experienced, you'll start to learn a few different things. Once again, that gave Nathan another compliment, something that I perhaps didn't use in this trade in particular. But as Nathan used it, once again, I could perhaps throw it on my chart here, guys. And literally, as you can see, it lines up with a certain target zone or a certain key level that I implemented myself. Never mind a tool helping me to select a target zone, which gives you also an extra confidence to try. For me, it's exciting, man. So like, this is a role, or this is an industry where you can, in hindsight, predict what's going to happen in the future. And with trading currencies, we're talking a big industry. We're talking numbers. We're talking currency. We're talking pounds. We're talking physical. You know what I'm saying? Money
makes the world go
round. Keeping it very, very simple and very, very realistic. This simply just by implementing certain tools that we're showing today, looking at trend lines, seeing if you're breaking through upwards trends or downwards trends, and obviously regions of support or resistances. Obviously, it's a good starting point for you guys. Nathan, let's go straight into it. What you got for me today?
Well, we're going across the pond. Travis did UJ, I'm going to do GJ. So for those of you that don't know, that's the pound versus the yen. And I'm going to start off with the weekly chart here. So as you can see, we've got my weekly chart. And let's just break down what we can see here. So as you can see, I've got these two pink horizontal lines. And that is my this is my resistance, and this is my support. So like I said before, it just acts as a ceiling and a floor for price to be rebounding in between until it finds momentum to either break through the ceiling and make new highs, or break through the floor and make new lows. So as you can see, or as you may can see, I'll zoom in a little bit, and we have been in a downtrend. So one of the first things you want to look at when you're looking at a chart is whether the price is in an uptrend, downtrend, or sideways trend, just like Travis mentioned on his pair. And as you can see, I've got a downward sloping line here that I've implemented just to confirm, easy as I look at the chart, that we have been in a downtrend. And one of the characteristics of a downtrend is price making new lower highs and new lower lows, as you can see here. So we have been in a downtrend since early this year, January, where we made multi-year highs at 156,600, and since then we've been on a downtrend. Okay, so going down into the daily chart. So what I mean, each of these candles represents 1 day of price action. Okay, you can see that we actually broke from the 19th of September. We originally broke through that ceiling, but since then we've kind of been teetering on the edge of that ceiling, okay, as you can see here. Now, what I actually seen this week was a confirmed break in continuation, which happened right here. So as you can see, on the 3rd of October, price broke through my resistance. Then on the 4th, it tested it again. Price did break through the ceiling, but by the time the day closed, price actually closed on top of that ceiling. So for me and Travis and for traders, that kind of acts as a confirmation that price is going to struggle to get down to that floor again, and it's going to be stuck in the upper floor of price action. Okay, and we ended the week with a nice big bullish candle on the 5th, which was Friday, which went up to my resistance at 149,300. Now, me looking at the price action as it stands, I'm still expecting bearish momentum in the coming weeks. And the reason why I say that is because, because you can see, well, we're not talking about MAs quite now, but for other reasons that we may discuss at a later date, I do expect price to be on a bearish momentum. Travis did show me the pound index this week and it was going down. Okay, now there's going to be two things that I'll be looking for GJ to keep things pretty basic. You can see here that I've got these two orange slanted lines, one slanting upwards and one slanting downwards, and price is kind of stuck in between this, and this is called a flagpole pennant, which is price action that's trapped between these two slanted areas of support, which is this line, and resistance, which is this line here. Okay, and as you can see, price is just trapped into between these two areas of resistance, rebounding, making lower highs but still making higher lows. So that is also known, as Travis mentioned earlier, as consolidation, sideways movement. So quickly guys, my aspect on last week, there's going to be two possibilities. We are going to break to the downside, and if I measure out this area of the first leg here, so we're going to break to the downside, and my initial target would be here at 144,570, or break to the upside up to 15226. Okay guys, like we said at the start of the video, this is called Forex for Dummies, and we just mentioned in support and resistance. So if price was to break to the upside, my next resistance, I'd work that out here by just measuring the distance between these two lines here, moving my line up, and then drawing a new horizontal line going across here. And as you can see, going back, it is a line that price is reacting with. Okay, so that's my two biases for next week. I know that Travis actually looks at GJ as well. I wonder what you're thinking about GJ yourself.
Yes, you know what, Dave? I haven't looked at GJ for funny enough. I haven't looked at that in a few months actually. So I'm gonna come over and have a look at your chart because while she's looking at that, I was looking at the chart, but I haven't got any key levels of support resistance in. And yeah, looking at yours, while she was talking, obviously with a traditional flagpole pennant, people could say that obviously you would look for if it's coming from an upwards direction in regards to trend. After obviously consolidating, it could break out to the outside. But actually looking at in regards to obviously resistance areas, you have to go back to around, I think, is it June this year? Was it May, June this year? Where price hasn't broke to the upside since then. So as you can see, guys, so if we just simply come down to here, what month was that? So we're talking May, 18th of May. That was the last time, obviously, prices reached that high in regards to breaking into obviously any upsides or downsides. Obviously, since it's hit that resistance, it's pulled back down, going into different channels. And as you can see here, it obviously attempted to break through and retest it. Once again, where the current flagpole pennant is right now. Obviously, slanted, descending trend line at the top of the pennant, and perhaps fall back down towards touching, making another third touch to the downside of the upwards bottom of the flagpole pennant trend line, and then perhaps continuing out of that pennant to the downside, any extra confluences, or perhaps, you never know, retesting once again to the upside. So looking at that, Dave, like literally, like I thought I'd obviously give my opinion on that as well. Which obviously that's my thoughts to be fair. So I'm with you.
And that actually helps me because to be fair, the rules of a flagpole pennant wasn't in the forefront of my mind. So now Travis has reminded me of that. And I can see that we've made a slight higher high here. I am favouring a break to the upside, but before that, like Travis just mentioned first, before that happens, I am expecting a third test of my slanted resistance zones. Here, look at that, you can see I've got two areas of support here, and then from there, I am favouring a move like this. And my first target, like I mentioned previously, guys, would be me measuring the mouth of the pennant, moving it out to where it would break out, and there we go. My first target will be here at 152 100. So guys, stay tuned for next week, and you can see us, updating you on these pairs, and you can see if our biases was correct, and you can see if we bagged any pips based on our technical analysis from this week.
So yeah, guys, before we leave, a few things to point out is literally, obviously, this was a quick thing. Obviously, we called it obviously Forex with Dummies. Simply we was in this position about a year ago ourselves, not knowing anything, and keeping it very simple, guys, with levels of support, levels of resistance, knowing where your trend directional bias is heading, if it's an uptrend, sideways movement, or downtrend. Key things to remember, guys, simple as that. Also, one thing that we kind of created as a rule, as dummies in the past, of what to remember. Obviously, ever so briefly, I mention it now, guys. Got to pull out the trusty mini whiteboard. Not sure if you can see it from back there, guys, but literally, rebirth rules. Have fun, have some more fun, dream big, but the all important rule, chase pips, not pounds. So what I mean by that, guys, literally focus on the pips, focus like obviously securing those pips, focusing on getting pips to the upside, pips to the downside, pips when the price actually moving sideways. The pounds and the numbers and the money will come afterwards. You think and get emotional in regards to, obviously we'll have more episodes on emotional trade and stuff like that, but you think too much about the money that you may have lost or the money that you're expecting to get. If these things don't happen, or if you're too busy looking at the numbers and the money, nah, you got it all wrong. You got it all wrong, guys. So keeping it simple for you dummies out there, because we was dummies as well. Guys, chase pips, not pounds. Last thing from me is For myself personally, I need to get better at it, guys, because I get you guys, we're getting a lot of people message on the poll and getting involved in that Instagram poll, but we're not actually showing the results at the start of the episodes. My bad, that's all on me, that is, guys. Literally, it's a fresh episode, it's a fresh week next week, guys. Monday, 8 o'clock, the new poll question, keeping it very simple, guys. Have you guys ever used levels of support and resistance within your trading analysis? It's either with me, yes or no. That's what I want to hear from you. Get involved. Start next week's episode. We're going to chuck that in there as well.
We spoke a lot about the tools that you use to trade. We also have a chance to win yourself a free 3-day trading course with ourselves. And after this 3-day training course, you're guaranteed to know how to analyze the markets, and you can start to build up your own psychology to actually make great entries and take profits from the market. So the 3 things you need to do to enter is go and subscribe to our YouTube channel. So if you're watching this video now, just click that subscribe video. Follow us on Instagram, which is Rebirth Holdings, at Rebirth Holdings. Step number 2 is take a snap of this post. So you'll see this on our Instagram. Take a screenshot, a snap, and share that on your story. And number 3, the final thing, is tag 3 of your friends that also is interested in potentially building themselves some financial freedom by learning a skill that can pay them for the rest of their life. So guys, get involved. A 3-day training course. I'm sure you would love to be able to get this for free. This is great value. Courses like this go for up to £5,000 with some people, so it's something that's going to definitely be beneficial to you and your family. So thanks again for tuning in for episode of Pipchasers. We always stay pipping. Guys, leave a comment or message us if there's anything in this video that didn't quite sink in, or if you think we could explain anything a bit more simple. We're just starting out in presenting this information in YouTube format. I always want to get better and better at it so we can help you potential future successful traders maybe have an easier journey of learning how to trade than if you wasn't having our help in the first place. So guys, feel free to comment, subscribe, shoot us over a message, and from me, thanks for watching. And just remember, for this week, if anything's not going right for you, so to speak, you can just blame. See, I messed up my words. I'm blaming you, Jose. I'm blaming you. So blame Jose Mourinho.